Yo, what is up, guys? It is Trader Keda here. It's currently Tuesday, 4th of June 2019. It's 8 p.m. here, where I live. And I thought I'd make a quick market update on where I think Bitcoin will turn. As you can see, we've been in this huge uptrend here, and we're starting to fade here a bit. I think a lot of people are kind of left confused here. Maybe not. If you look at the higher time frames, this was a long time coming. I mean, if you can look at the weekly, for an example, you could see here we had this. We had a doji here, a long leg doji into the order block, sitting right here, and we also had this inverse target here that I was talking about, and we sort of SFP'd it, or we swing failed it and picked up all the liquidity sitting above here. What's interesting about this target is that everything in here, or most things in here, have been tested, but now when we're approaching these areas here and these areas here, they have not been tested yet by the market. So especially this here, and you know, this was a huge order block sitting right here as well. You can see we traded into it and we closed below this inverse last target. And there's also, if I bring in the MFI, RSI, or any type of trend indicator, they were pretty much all just completely overdone up here. And we're getting a pretty hefty reaction here on the weekly. Something that I find really hard to understand is that we have targets here. You can see here, for an example, we sort of bounced off from this weekly inverse target here, but then again, it's hard to determine, especially on Bitcoin, how bearish we are or how bullish we are, because it pretty much can turn really bearish out of nowhere and just keep going like this, and people would just get fucked trying to long this whole thing all the way down here. That's something I don't really like with Bitcoin, is that it's very easy to, it's very hard to trade on the lower time frames, I'd say. I think that it's easier to trade Bitcoin on sub 15 more so than it is trading Bitcoin or swing trading Bitcoin on the 4 hourly. It's easier to go to the extreme ends to trade. If you want to sit at the hourly or 4 hourly, you're pretty much gonna get run over trading Bitcoin. It doesn't respect levels, and it's very unpredictable in what level is going to hold. You can have some success in sort of determining the most, but even so, if you sometimes it just ignores major areas, that because everybody's looking at them, so it's just going to ignore them and keep going. And sometimes it just reacts really well to them, and I haven't figured out a way to sort of identify that, because I don't know how obvious certain things are to other people. So for example, if we go back, this is sort of my trade idea here. So you can see we have swing high here and we have a swing low here. That's pretty obvious, right? What's also happening here right now is we have huge liquidity void sitting up here, and we also have an order block here. Above this order block, in this area here, there's going to be a lot of long stops. Sorry, there's going to be a lot of short stops. So if we decide to turn here, did we have a spike? No, never mind. So if we decide to turn here, and there's a lot of people longing or shorting on the way up here, thinking that we're gonna see retracements, most of these people are probably gonna put their stops somewhere above here, or even earlier, somewhere here, maybe above these. But I think that the higher we go, the more obvious it's gonna be to place your stop loss either above this high or above this high. So what the target would be for this type of setup, I would try to target this order block here. Okay, so we have established that, and of course, depending on depending on how well you manage risk and so on and so forth, you can of course sort of have a trading stop loss maybe, or try to go for even higher targets. It's hard to tell, as I said in the beginning, how bullish or bearish we are now, and that's sort of what's scary for me at least, because you put your long in here at a reasonable area somewhere. I'm gonna be talking about that later. And you just get run over because maybe that area is very obvious to a lot of other people. And of course the instigator or market maker, he knows this, and he's just gonna run you over and you're forced to market out of your trade. And he has, he will not have to put in so much effort in moving the market, because there's gonna be a lot of panic going on at these areas, moving the market for him to the downside, and he can sort of just do what he does. But for looking up here, for an example, we had a run on these highs here. It was pretty obvious, and we came back in. As I said, we traded. This was the inverse target I was talking about. You can see we got a clean close right below it, and we traded into the order block up here as well. And then we fell lower. Market slowly drifted up here. Now this is something else that we look for. This is a momentum ignition pattern where it looks something like this. Alright, we see this a lot on Bitcoin, but in this time we got extremely faked out up here, and pretty much they just accumulated short positions in this area, and then they are sort of riding them all the way down here. It's hard to know how far this will go. As I said earlier, it's probably gonna turn when the least amount of people expect it. And you can see here that we are now in a short dominated area, and longs have just, like most longs I think, have left up here somewhere in this move here. They have taken profits on their long positions and not trying to ride it anymore. So there's a lot of long profit taking happening right now as well, pushing the price lower. And you can see here that longs are dropping off at a dramatic rate, and we are now in short dominated areas. People are shorting this here, hoping to maybe ride this even further down, which is good for us if we want to go long, because as you can see here, I've already mapped it out. This whole move up here, we're on huge short momentum, and this sort of fueled the whole market moving higher. People had to short cover, people had to short cover, no, long cover, they had to do something here to sort of, maybe they got margin call or something, and they had to open longs here to cover for the short positions. And we might see something similar like that in the future, depending on how low this goes here. And of course, if we look at the higher time frames, all of our indicators are gonna be completely blown out, oversold, trend exhausted, everything like that. All indicators are telling us the same thing up here. Trend was completely overblown here, and now we sort of have to pay for that by the market moving lower. So sort of what I was looking for here, back to my sort of strategy or whatever, I mostly look for liquidity runs. So for example here, people that long this up here, they longed here, they longed here, they longed here. Where are they gonna put their stop losses? This whole range probably had most of the stops sitting right below here, where this move initiated from, right below this bullish order block. Okay, now you might say, okay, I'm gonna buy this stop hunt here. Well, it came back down, it closed below this area. Now that's not something that I want to see at all. You see, it came back up, it pivoted off of this area again, this order block, and then immediately shot back down here. We didn't even get much of a retest or anything, no break, no nothing. Came back into it, immediately fell out again. So these people trying to catch this stop hunt here, they got most likely taken out by this move here. Maybe some people had their stops resting below here. Actually, that's what I'm thinking right now. Some of the guys that have much more or larger positions, they're not gonna use small stop losses. Even if you took a trade here hoping that this was a liquidity hunt and that we were gonna reverse out of this, these guys might not even have left their trades in here. They might still be in their trades right now in here. And these guys probably gonna put their stop loss below here. Somewhere below here. So what is happening right now is that we have a lot of longs probably stopped out, but also a lot of longs sitting on their ass not doing anything. And they don't want to see the market trade back into this area. Okay. What's also down here is that we have a huge order block sitting right here. This huge candle originated out of this order block here. Now, you might say the same thing here. Well, we had an order block here, and you can see we got a rejection out of this order block here. You could have scalped this trade. Do I think that the market is going to reverse from here? Could do. But the likelihood of it is not that great. There is a much larger liquidity pool sitting below this low here. So from a reasonable standpoint, there is a lot of people that tried to play this here that got burnt. They tried to play this move and they got completely burnt. And maybe they got stopped out here. You can see the body of the candles. We took the bodies out of this candle here. Maybe there were a lot of stops resting just below the bodies here. But then again, depending on how we go here, depending on how much shop we see here, I don't think we're gonna reverse out of this area immediately. We could do that, but the likelihood of it is not that great in my opinion. So we could do that, but then again, I think there is a larger liquidity pool sitting down here as well. And if I show you this for an example, if I go back to the 4 hourly here, you can see here that this is a gap, okay? We have a low volume node sitting here, so the market has no reason to sort of trail out of this area here. In this case it did, but again, we don't know if it's gonna continue lower here or not. This could as well be a bull trap on the lower time frames. We don't know that yet, but then again, I would much rather prefer trading this area here. Okay. So you can see here we have an order block sitting here and we have an order block sitting here. So either you trade the top of this order block or the bottom of this order block. And then again, this goes back to how far does Bitcoin go in these dumps. I don't know how obvious this area is to people. This area is very obvious because there is gonna be a lot of resting stops below here. So what I'm thinking is the market trades through this liquidity pool sitting right here, comes back into this order block, and there we see a rejection of some sort. Now we also have a lot of other things sitting here. For an example, we have the 61.8% fib sitting here as well from this whole range. Okay, so what I want to see is the market taking out these guys, coming into this order block, absorbing new long positions, then coming back up, and we see a close above, maybe turn sideways a bit, and then move higher from there. But then again, this also goes back to what I've been talking about. How obvious is this to other people? And that's really hard to know. You don't know how obvious this area is going to be to other people. You don't know how many people tried to play this. How many people got burned trying to play this here. And these people that try to play this, they are gonna have their stops sitting, resting below here. Or maybe they already got taken out by this wick here. I can't know that for sure. Maybe I can look at heat maps and stuff to sort of identify if we ate through some walls here, or if there was a large pool of orders resting in this area. But then again, I would much rather prefer us taking out this swing here, trading into this order block, and then coming out of it. So where would I place my trade in this order block? Well, if I go to the daily here, it's gonna be messy here, but just you can kind of ignore everything else here. It's not that important for now. So if I just do this, if I just take my Fibonacci tool and I just take, this is sort of where we started out of, okay? This whole move, this whole range came out of this area here. And if I just take this up here, where's the 50% mark? Where's the 50% test of this range? The 50% mark is also resting on top of this order block here. So if I go back to the 4-hourly, you can see that the 50% mark is resting right on top of this order block, right below this liquidity pool. And sort of that gives us even more confluence. So we have the 61% and the 50% of the whole up move here resting in this area. Now then again, how obvious is that to other people? Because sometimes we see like something like this, so we come back up here, maybe trade back down, and then we see something like this, and then we come back up. How do you mitigate that type of move in the market? I honestly don't have a good answer for that. You could wait, but then again, you don't know if it's just gonna wick through here and then come back up immediately. Because that's sort of what I'm thinking is going to happen. Sometimes this doesn't happen, we come straight through, we come back in again and we shop a bit and then we come back up again. And you would get what you call an OTE entry, where it's coming back up, coming back down to this OTE point, maybe down here even, and then we see the market move higher. Some type of bat or Gartley pattern. So what I'm targeting here is, what I personally would do, I would look at this candle here on the 4-hourly, and I would trade the top here. I would have resting limit orders sitting at 7,370. That's how I personally would trade this. I have not yet decided if I want to have a resting limit order sitting here, because as I talked about earlier, sometimes the market is very cruel, especially with Bitcoin, depending on how obvious this area is, which is extremely hard to know. It could just go straight through it, and depending on what leverage, I wouldn't trade this. I wouldn't go above 3x, or that's even too much in some cases. I have not yet decided what I want to do. Maybe 3x long. Maybe put half of my account size on a 3x long here. But then again, I don't know how I'm gonna mitigate drawdown on this area, because I don't think that the market is just gonna continue moving lower here and just completely taking out this whole range here. I don't believe that's very likely. So how do I trade this area here? Well, maybe somebody else knows, and as I said earlier, we do have confluence. For example here, this area lines up pretty perfectly with this high volume node here in the market. And again, if the market were to reverse out of this, I would try to target either these lows here or this order block up here. And that's sort of my trade idea. And we have, for example, if we were to dump even further here, we're going to have confluence with the indicators as well. even though I don't really trade based off indicators. You can see that if we keep moving lower, for example, the wave trend is gonna be exhausted if we keep going in here. So we're going to have confluence on the 4-hourly. And if I look at the RSI, you can see that if we keep moving lower here, we're gonna have confluence with the RSI as well. Not really divergence from a divergence standpoint, but more so from a oversold or market exhaustion standpoint. And something else to keep in mind is that if this trend in open interest keeps going, when longs keep taking profits and shorts keep staggering, if we reach a point where there is a gap between longs and shorts have completely taken over, that's just gonna fuel further upside for the market. So it's actually good that we see a lot of shorting coming in here. But then again, this is Bitcoin. It could go just face melt, and you would not be able to react to that type of price action. It can go very, very fast. Don't use high leverage if you're gonna take this trade. I would stay on the safe side of things here. So that's just my 2 cents, and yeah, thank you.